Hello everybody, this is Toni Turner and welcome to the market now as of Friday, March 3rd at about 2 p.m. Eastern. Well, investors are searching for safer areas in the U.S. stock market. We're finding that traditional shelters that held up in last year's sell-off, like consumer staples, utilities, and healthcare, are seeming to be more problematic this time. After rebounding sharply in January, the benchmark S&P 500 is getting kind of wobbly again as investors worry the Federal Reserve will take interest rates higher than previously expected and keep them elevated for longer to thwart inflation. And on that note, let's go on to 3 charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at $402.71. That's below the 20-day moving average, the red line coming in at 405. So it is trading right now the SPY is trading 15% above these October lows back here. To be really bullish, we need it trading 20% above prior lows. Well, we're at 15%, but we'll take it for now. We know that after making those lows, the benchmark climbed up from there, made a nice uptrend move, came up to highs about 410 in November and December, made a quick double top at 410, and on Monday of this week, this past Monday, I gave you a quick lesson on double tops. This time between the support level here at about 392 and up here at 410, we have about a $18 spread here. We talked about measured moves. See, there's about 18. So if we took that line and picked it up and moved it down, we could say, see the double top here, then it broke support, came down about the same distance as it went up, came down here to 375 and consolidated under the 50-day moving average at 375. Then it started moving up in January, always a good sign when the market moves up in January. Excuse me. Jumped back over the 20-day, the 50-day, the green line, finally the 200-day. That was nice. And it popped up here to 418 on February 2nd. Then we said, you know what, it's overbought here. It's trying to get up and over the 14-day RSI. When that happens, when it gets overbought, price usually backs off a little bit, not instantly, but it usually backs off on any asset. So the SPY has gradually fallen back below the 20-day, back below the 50-day as of this past week. And yesterday, Thursday, it sat here on the 200-day moving average, which is coming in at $393. Actually, yesterday, the SPY made a low at 392. Today, it's bounced off that. It gapped up this morning. And at least we're positive on the day. Is this a trustworthy move back up again? We are not going to know until next week. This is going to be pretty exciting, I'm afraid, or I guess, for the next week or so as the SPY makes up its mind about what the Fed is going to do next. Of course, as traders, all we ask if we're bullish is that the SPY stay above the 200-day moving average coming in at 393 and above the 50-day moving average coming in at 397. For me, that'd be great. Just stay above those two lines. Our next chart today is a chart of the Invesco QQQ, symbol QQQ. The Qs represent the top non-financial, 100 non-financial, I should say, companies by market capitalization in the NASDAQ stock market, like Apple, Amazon, Microsoft, Alphabet, Tesla, that whole group. Now, one reason this popped up today is because Apple popped up today, and Apple is quite a large component of the QQQ. The Qs today, when I captured this chart, were trading at $298.74. just below the 20-day, which is up here at $299, almost $300. So it's got that little bit of resistance there. Kind of like the S&P 500 or the spider, the Qs came down yesterday, Thursday of this week, moved down to the 200-day moving average. Thankfully, didn't get to the 50-day because these two were inverted. Then popped back up, gapped up today, and again, right now is trading at $298.74. It is trading about 17% above back here. It's October lows. October 13 lows, almost everything gapped down. The Qs did too. It gapped down to $254.26. Then it tried to get going again. Had a little rougher time than the S&P 500 did getting going again. It popped back up, then came back down to 260, popped back up, almost made a triple top here, made a higher low, right, as I said, right here at 260, which has become pretty good support, long-term support for the Qs. So it tried to go up again 3 times, couldn't do it, did the dumpster dive, back down here to 260 again. Then in January started moving up over the 20-day, over the 50-day, very good. Then up to 296. Where are we here? Then up on February 2nd, up to $313.68 right here. So this made a big move up. I talked on prior lessons about, look at the 14-day RSR being really overbought here. Whenever we see that, whenever we see very, very steep moves on daily charts, we know that, or any chart for that matter, we know that there's going to be a reckoning here somewhere. The shorts are going to come in, and again, the RSI was over the 70 line. So the Qs got up to that high to $313.68. Then the shorts started coming in. People started taking profits. Price moved back down again below the 20-day. Kind of wobbled around this past week. Didn't know whether to fish or cut bait. Then fell finally yesterday, Thursday, again below its 200-day moving average, coming in at 290. Yesterday it opened at 288. Then today it gapped up. So again, trading now at 298.74. We do have resistance up here at 309 and 318. And by the way, this resistance up here at 313, if you look left on the chart, we'll see that in August, I don't know if I can draw a straight line that far, resistance was 211. So it's just amazing to me, and always has been, how these pivots on charts can actually mean something. They do mean that before buyers were here holding the stock. This is just one example about holding the stock in September, and said, hey, the market, I held it here, then I went through all the anguish of what happened over the next few months into the first of the year, and doggone it, the next time this stock, or in this case this ETF, gets to where I was before, I'm going to sell it and get out. And that's some of the logical reasoning. Maybe these people can't read charts like you and I, but they sure know where they bought it before and where they took a loss before. So that all comes into it. At any rate, now we do have these resistance at 309, 318. What we really want, again, as if we're bullish, we want the QQQ to remain above the 50-day moving average in the coming week at 286, and the 200-day moving average at 290. For bulls, we want it to please stay above those lines, so stay tuned. Our final chart today is a daily chart that we haven't looked at for a while. It is the Invesco Solar ETF, symbol TAN. That's a good symbol for this ETF. It is a global ETF. Companies in the solar energy industry Top holdings includes Solar Edge, Enphase Energy, GCL Technology Holdings, Jinko Solar Holdings. So it is a global ETF. Now when I captured this chart today, the TAN was trading at $78.62. Now, you know I love to look at longer term charts, and I looked at a monthly chart and I found that the all-time high for the TAN was in May of 2008, and get this, it was trading, it made that high at $307.90. So of course price came down from there over through the years and bounced around. We have a recent high here in August of 2022 where it gapped up to $91.12. It did fall from there, but it made it up to 91. Then it bounced around here and finally gave up in September, fell pretty sharply down here, and it made lows to around $64 down here. So this is about $64 where this actually a little tiny, you could call it a little tiny bottom, if you double bottom if you wanted to, around 64. Then the TAN moved back up pretty dramatically, back up to November and December highs to $84. So 64 to 84, not a bad move, but of course, like I just said a minute ago, things that go straight up many times can't stay there and start coming down, especially price. So this is not a extremely calm ETF, but I think once it starts trending, we've been in a wobbly market for quite a long time now for almost everything. Once it starts trending, I think it will be good. Then it finally came down here in January, back down to the 72 line, and I've drawn a lower trend line here for you so you can see where it's been. So it's been up, back down to this lows around 70, then it moved higher, back up here in January to 84, then slid back down here, and then down in the last few weeks it slid back down here back to 72. So this 72 line here that we see, 70, 72, I've drawn this trend line, slightly higher lows every time it's held here. Now, some of you are going to say, because you remember our last lesson, hold it, doesn't this look like a bigger double top? And my answer to you is you're exactly right. But to be a top reversal pattern, price has to roll over and fall through these support prices right here, which come in at 70 and 72. And so far, at least in the last week, price on the TAN has moved higher, not lower. So it is not glued to where the stock market goes, slightly, but not consistently. So just wanted to throw that in. Okay, so let's get back to our trade here. The TAN is trading right now at $78.62. In the coming week, if the TAN can stay above 74, now I put our usual red stop in here right above, or right below, I should say, right below 74 area. If you want to get in and hold it and say my stop, Toni, is below 72 because that's where support is, that's fine with me. Either way will work. But I know for sure that my stop will be maybe half the position at 74 and the other half at 72. That's also something you can do. So if in the coming week this TAN can stay above 74 and the market stays in a reasonably good mood, I will add a small position to my trading portfolio. If and when the TAN can rise above and stay above 84, and I want to say for 3 consecutive closes, I will add to my position, and of course by then I will be trailing my stop. So you may want to keep an eye on the TAN. And finally, if you'd like to become a more successful trader, this is the perfect time to check out my trader training programs. You can choose from 10 different online trainings, like our popular flagship product, 7 steps to successful trading. Everybody likes that. Plus, you'll find really easy to learn strategies on swing trading. That's a very good thing for traders to know. Trend trading, how to trend the trade for profits. That's a little easier. You can also get novices want to read how to read charts. 3 winning setups is always good for short-term traders. And as I've been saying for a while here, learning how to bottom fish like a pro is a really, really good skill to have right now. To see all of my online training programs, simply go to the link on the screen up here, or easier still, just click on the orange button below. Okay, you guys, keep green on your screen. See you next week. I'm Toni Turner, and this is The Market Now.